Hello, traders. FX Pip Collector here. Today is Tuesday, February 25th, and this is my morning video where I like to look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely join my free Discord trading community, linked at the end of this video in the corner and in the description. If you'd like to check out my website, it's fxpipcollector.com. Gets you access to all the benefits listed below and more. So, anyways, first thing first that I always make sure that everybody's aware of in the morning is the news for the day. This is a pretty light news week for the US dollar pairs, especially, but what do we have today? We have this S&P composite news. Definitely not a very big news event. We got the mid-level consumer confidence. Definitely not a very big news event. And the manufacturing index is also not that big of a news event. So definitely a very light day today for news. But that definitely doesn't mean there will not be moves in the market. It just means that there's not going to be like a news driven move, at least not a scheduled news driven move. Now, Trump is usually talking almost every single day lately, so I wouldn't be surprised if Trump does talk later on today. And anytime he talks, it definitely can move the market. So I always like to start off looking at the US dollar index. Anybody that's been watching my videos is probably knows that how important I find the US dollar index if you're trading any of the US dollar pairs. I still think that this looks like the potential end of a wave B right here. And if that is the case, then it is likely going to keep going down for a wave C. I think this is an A. I think this is a B over here. And I think that it needs to go down and make a wave C. If that is the case, it doesn't mean that there may not be rallies on shorter time frames. It just means on these higher time frames, like the weekly and daily, we should continue to get lower lows, lower highs. Now, going down to the daily time frame, this is where we're kind of at a little bit of a crucial point right now, because if it does go up and break structure, then that would be the end of this trend right here. And if that does make an end of a trend, then it cannot be a wave three. It would have to be a wave C at that point. So if we do get this going up, if we do get an end of a trend, then that has to be an ABC, and that tells me that it likely is going to go all the way up and make a new high. If the dollar goes all the way up, makes a new high, then I would expect the euro dollar, pound dollar, Aussie dollar, Kiwi dollar to go down and probably make a new low. Probably dollar CAD, dollar Swiss to go up and make new highs. But it really all depends on this dollar index. On the weekly time frame, it looks like it's going down. If it makes a lower high, and just keeps on going down, and eventually goes down and breaks this low, then I think that's the confirmation I would say that will tell me 100% that this really is the end of a wave B. So kind of a crucial point for the dollar, whether or not this is an ABC or whether it's a 1, 2, 3 big downtrend. So starting off on the euro dollar, like I was saying at the beginning of the video, my analysis for all the dollar pairs is really focused on the US dollar index. So if that dollar index breaks up, then the euro dollar could break down and go down and make a new low. If the dollar index doesn't break up, then it's probably going to keep on going up. I'm definitely leaning towards wave one, wave two, wave three. I'm definitely leaning towards it going up to about the 1.07 area, which I think is a very likely area for this to end a wave three. So I'm definitely leaning towards the 1, 2, 3 analysis, but I'm definitely watching the US dollar index just in case I am wrong about that analysis. And I have no problem being wrong. As long as I recognize it early enough, I will make money either direction. So going down to the 1 hour time frame, I mean the trend is definitely still up. We cannot argue that. I have my Fibonacci retracement on this last push up right here. Now this push up is kind of a three-way move, isn't it? So that's why I'm kind of wondering if this is actually supposed to be like a trend. This is like a three-way move, and this would be like an A, this would be like a B, and it goes down more for a wave C. But if it's like a running ABC correction, which if this really is a wave three on the higher time frames, a running ABC correction would make sense to me, then it potentially will make a higher low, maybe push down a little bit, but it would make a higher low and it would just keep on trending up. So I definitely am looking for longs. I'm watching my Fibonacci retracement levels very closely. If it goes up and gives me another break to the upside, I definitely would go long again. If it doesn't, it makes a lower high, goes down to a lower Fibonacci, and then gives me a break. That's the opportunity I would be waiting for. So I'm watching my Fibonacci retracement levels very closely for a break at a Fibonacci level to give me another long opportunity, potentially for the end of an ABC correction. Moving on to the pound dollar, same exact analysis. I mean, if the US dollar breaks up, then the pound dollar is likely going to break down and it likely would go all the way back down and make a new low. Definitely a possibility. And me watching the US dollar index will tell me what is going to happen. Now, for now, I'm still sticking to the wave three analysis because there's nothing to prove that it's not a wave three. If it really is a wave three, I would expect it to go up to probably about this area, someplace around the 1.29 to 1.295 area to finish off a wave three. So unless the dollar index proves otherwise, I'm definitely still calling this a wave three. And I'm still looking at anything I see on sort of time frames to the downside as nothing more than a correction to the uptrend. So going down to the 1 hour time frame, I got my Fibonacci retracement on this whole move right here. Just like on the euro dollar, I think there's a good chance that this is like 5 waves down. I think there's a good chance this is 3 waves up. Maybe this is going to stretch out into a bigger move to the downside. Maybe it'll go down and even take out this low before it goes up. But I'm watching my Fibonacci level retracement levels very closely. If we get a Fib bounce at any one of these Fib levels, with a nice engulfing move to the upside, I definitely would take it as a long. The trend is up on the dollar, or the trend is down on the dollar index, and the trend is up on the pound dollar. So I definitely will continue to look for longs. If it really is an A, and it really is a wave B, and it really is a wave C, then it may actually go down and take out this low before it starts rallying. So make sure you pay attention to your Fibonacci levels. Don't just go long for no reason. You need to see a nice fib bounce, a nice engulfing move to the upside to go long, preferably at a Fibonacci level. Moving on to the Aussie dollar. The Aussie dollar is definitely looking pretty strong to the downside for sure. If it breaks and holds below this structure, and if the US dollar index breaks and holds above its structure, then I would have to say that it is going to go all the way back down, or at least make a correction to the whole move up from here to here. So we're either looking at, the dollar index for confirmation that we're in a bigger move to the downside, or we're looking at a higher low for more, upside potential. Because there is definitely no proof that this is going down until the dollar index breaks up or this breaks down, which we don't have either of those yet. So taking it down to the 1 hour time frame, it is definitely stretching out to the point where it's not really looking like a correction anymore. I will definitely give you that. Looking at a lot of the other dollar pairs, a lot of the other dollar pairs look like this is an A, B, and C. So if this like comes down and rejects this area or it makes a higher low and makes a nice move up, makes it a break of structure, then I definitely still would take it as a long. On the other hand, if it breaks below structure and the dollar breaks above structure that holds, then I would definitely start looking for shorts at that point, put my Fibonacci on the whole move up on the daily time frame and look for shorts. But for now, I'm still paying attention. If it goes down, breaks, but it rejects structure and goes back up, I would definitely take it as a long. If it just bounces from this last Fibonacci level, goes up and breaks structure, I would definitely take it as a long for that also. So going back up to the daily time frame, the Kiwi dollar for me is exactly the same analysis, so I don't cover it. I definitely do trade it, but it's exactly the same as the Aussie dollar, just a little weaker, a little stronger. Moving on to the US dollar CAD, I mean, the US dollar CAD, I still think looks like it very likely is the end of the correction. But if the dollar index breaks up, then this possibly could keep going up also. So just keep in mind that there's really no proof 100% that this is going down until the dollar index tells me so. As of right now, there's no breaker structure to the upside, so the trend is definitely down. I got my Fibonacci retracement on this move down. I'm watching my Fibonacci levels very closely. If we get a nice Fibonacci bounce, I definitely am taking it as a short because to me, it looks like a complete 5 waves up. It looks like a complete ABC correction, and it looks like it should end up turning to the downside. So going down to the 1 hour time frame, zooming back out a little bit, I got my Fibonacci retracement on this whole move down right here. I'm watching my Fibonacci retracement levels very closely. This line right here can be moved around. I just have it in the general area, but I'm definitely waiting for a Fibonacci bounce. I'm waiting for a nice engulfing move to the downside to go short for the continuation of the downtrend. Really, to confirm that this is really going back down, we kind of need to see a break of structure at a Fibonacci level to really confirm. So it kind of depends on what kind of trader you are. If you are a really short time frame trader, you could probably still be looking for logs. If you're more of a swing trader, then you're probably waiting for a Fibonacci bounce. You're waiting for a break of structure to give you another sorting opportunity. So moving on to the US dollar Swiss. To me, the US dollar Swiss definitely seems like it's going down. I think this still looks like 5 waves down. I still think this looks like 3 waves up with a lower high wave C. I still think it looks like a potential 1, 2, 3 coming. Like this is a wave one, ABC of two, and we're in a wave three. Which, if that is the case, you wouldn't think it would go down to about this low of wave four to fit us. So could be a lot of downside potential on this. Moving down to the 1 hour time frame, I mean, I'm definitely looking for sorts, and it definitely has been some pretty decent sorts. I would have probably taken that right there as a sort, and then when I saw it coming back up, I would have said, oh, look, that's a leading diagonal wave A, 3 waves down for wave B, up for wave C, and then look at that, that's another ABC. So there's been a few pretty nice sorting opportunities. Now, whether or not it's just going to keep on drifting down now, or whether it's going to make a little bit of a bigger pullback, I have no idea. I just know if I see any 3 way pullbacks, if I see any Fibonacci bounces, I definitely am going to continue to look for sorts every single chance I get, unless the US dollar index breaks up or unless this breaks up. I am definitely sorts all the way. So moving on to gold. Gold, I think, is likely in a wave five or wave three if you go all the way up to like the monthly, weekly time frame. So a lot of the times when you're close to the end of a trend, which we could be getting close to the end of a wave three, which I think will probably end around the $3,000 an ounce area, right around the 261.8% Fibonacci extension. So a lot of times at the end of a trend, you get what they call an ending diagonal, which is basically a very, very overlapping pattern, something like that. An overlapping 5 way pattern. So we could have a very, very messy walk up to about this $3,000 area over the next week or so, maybe getting ready to finish off this wave three all the way up to the weekly, monthly time frame. For now, I'm definitely still bullish, definitely still looking for longs. And the reason why I say it could be very messy is because it's already starting to become a little bit messy. But to me, it definitely looks like 5 waves up. It looks like maybe this is a wave A, maybe this is a wave B, maybe it's going to go down, make a wave C, and then potentially go back up. I personally don't really recommend looking for sorts because a lot of times when you are looking for sorts, against the higher time frames, you'll be like, oh, this is going to go down much more. And then instead, because all the higher time frames are in an uptrend, it just keeps on trending up. So I personally would be looking for longs. I'd be looking to go long at all these points right here. If it does make an engulfing move to the upside, especially if it breaks structure, then I definitely would go long again. If it really is like a wave A and a wave B, and then it potentially could go down quite a bit further to one of these lower fib levels for a wave C, so just make sure that you see a nice bounce, a nice engulfing move to the upside before you do take that long opportunity, because it could definitely go down to like the 61.8, maybe the 50% or more before it actually does continue back up. So moving on to the yen pairs, to start off on the US dollar yen. I personally think that every single one of these yen pairs is in a big downtrend for a wave C. And then for me, there's really no reason whatsoever to be looking for longs on any of the yen pairs. I'm definitely looking for sorts. If you go down to the 1 hour time frame, I mean, yeah, there definitely is some rallies to the upside, but the real money to be made right now is going soaring at the end of every single rally you see for the continuation of the downtrend. So how is this actually going to play out on these sort of time frames? I have no idea. I mean, it could potentially go down now. It could potentially go up and then go down. All I know is that if I see any 3 way pullbacks, I see any golfing moves to the downside, I will definitely continue to look for sorts. The real money right now is definitely looking for sorts on the yen pairs. I personally wouldn't recommend looking for longs, but it is up to you, I guess. Moving on to the euro yen, same exact analysis as the dollar yen. I think that all the yen pairs are heading down to about the 100% Fibonacci extension, which in this case is someplace around the 145 area, 145 area for a potential wave C of wave 4. There is definitely no reason whatsoever to try to go short right now. I mean, we got a little bit of a triple bottom type thing going on, but I mean, it might just make like a little teeny bounce and then just keep on going down, especially if we really are in a downtrend for wave C, which it looks like we are. So yes, there definitely has been a few pretty decent little rallies that you could have made money to the long side, but the real money right now is definitely trying to go short at the end of every single one of these little rally peaks. Is it going to go up right now? It might. I personally will not be going long if it does go up, but I definitely would recommend trying to get short after any rally you see, especially if it really is a three-way pullback. To me, it looks like a possible A, it looks like a possible B, it looks like it could go up for a C, and then just continue the downtrend. So I personally am definitely recommending shorts. I don't really think it's worth trying to go long because even though it looks like it should go up, it may just turn around and just keep on trending down. So be a little bit on the cautious side, assuming that the yen is making any significant move to the upside. Moving on to the pound yen, just like the other yen pairs, I think that it's going down to make a wave C, probably someplace all the way down to about the 175 area, 175.5 area is what I kind of think is a likely target. So for me personally, I will definitely continue to look for shorts unless the higher time frames tell me otherwise. And yes, I mean, there has definitely been a few pretty decent rallies. That's not what I'm saying. There definitely could be another pretty decent rally. It kind of almost looks like there will be another rally on the 1 hour time frame. What I'm saying is that the real money is definitely not to the long side. The real money is definitely to the short side at the end of any, three-way pullbacks you see. I personally don't recommend going long. I recommend waiting for three-way pullbacks. I recommend waiting to go short, hopefully at Fibonacci bounces for the continuation of what I think is a big wave C of wave 4 on the much higher time frames. You have to remember, especially with the yen and the US dollar pairs, that the trend is your friend. If the trend is down on every single higher time frame, and you go down to the 1 hour time frame and you're like, oh, that looks like a nice long. More times than not, you're going to get smacked in the face and the thing's just going to go down and you're going to end up losing. Not only are you going to end up losing on the long, but you'll probably end up missing the short, which would have been the real money maker. So definitely recommend looking for shorts on the yen pairs as of now. So anyways, don't forget to join my free Discord trading community. And as always, thank you for watching and happy trading.